Good morning, San Diego. Good to have you here again. On yesterday's show, we had some powerful women on this program. We had Melissa Tucci, Sarah Goforth, Andrea Kay. Hope you caught that show. Today, we're bringing the men. I got black on black today with the white collar. We're bringing some powerful guys. We got Matt Rinke, who is a brilliant financial advisor with Illumination Wealth. You probably have a lot of questions why the market is off to its worst start of the year. He's going to help us with that. Jonathan Giroux, not just a mortgage guy, my mortgage guy, helped me close my deal last year on a purchase, knocked it out of the park, got me a great interest rate. He's going to help us understand why mortgage rates are getting better, yet Janet Yellen saying we're increasing rates. So that doesn't make any sense. So he's going to help us with that. And for the first time on the American Dream, our daily show, we're going to do an email lightning round. Now, what does that mean to you? It means that I'm going to answer your questions and get as many in as I possibly can. We get so many great questions and comments from our audience about finance, real estate, tax planning, credit scores, debt management, even comments on the show. End of the show, I'm going to answer a lot of those. Hopefully, the questions we got, I can help thousands of you out there. So let's go ahead and not waste any more time. We got a great show lined up. Let's kick off the American Dream right now. I go to battle for you every day to combat the nonsense in the mainstream media. They're more interested in sound bites and sensationalism. I'm interested in the truth and being your consumer advocate. My ultimate goal is to help you win in any marketplace, and I'm bringing an edge in the real estate and financial game. My name is Craig Sewing, and this is the American Dream. Welcome to the show. Good morning, San Diego. Glad to have you here. A lot to talk with you about today. I'll tell you what we're not going to talk about. We're not going to get into politics today. We're not going to get into the 24/7 news cycle. You get enough of that stuff. I call them empty suits who just regurgitate opinions all day long. In fact, we're going to do the exact opposite of all of that. Today, you're going to get something of serious substance. The market has started off this year and absolutely imploded. And if you watch it too closely, it's going to make you feel nauseous. So we're going to help you understand the why behind the market. Why are we seeing the Dow off to its worst start in U.S. history? That's not good. So worst start to the year. So we'll dive into that. We got Matt Rinke, who's a financial advisor, who'll be joining us in studio. Also, Jonathan Giroux, radio show host on 1170 AM KCBQ. He is our mortgage guy. He's going to come in here, help us understand what's happening with interest rates. And we're going to do a new segment today, which is our email lightning round. We get all of your emails at craigsewing.com. In fact, I'm going to go ahead and encourage you to go there. I got my smartphone. I hope you have yours. You go to craigsewing.com. There's a contact form. If you hit me up through that, it emails me directly, and we can answer your emails. Now, we don't have to do them all on the show. We can answer them privately, but that's the best piece of information I can give you today is if you have any questions with anything we dive into. You got to remember, this is a San Diego show, America's finest city. So the people you hear on the show, the content we speak about, it really is designed to help you walk away with it with something of substance. And if you need to reach out, again, visit us online. All right, so today's talking point, I really wanted to hit on, the market's not doing so well. And many in the media they embrace that negative stuff, right? Fear is one of the best ratings generator that exists in the media. Well, we don't want to scare you. The market's down, but it's not the end of the world. In fact, there's some silver linings when you see the market down, and one of them is mortgage rates. When money is flowing out of the stock market into bonds, that can help mortgage rates. So I wanted to answer a question. Now, this is something that we got recently from our website, asking about why mortgage rates are improving if Janet Yellen has just raised rates. That's a great question. How, if the Fed chair is raising interest rates, are mortgage rates going down? This seems counterintuitive, and here's why. The Federal Reserve is raising rates to not overheat the economy. We've thrown a lot of stimulus at it over the last few years. Every four-letter acronym from HAMP to HARP to TALF to QE 1, 2, 3. So we've done a lot. Short-term interest rates being lowered down to 0 to 0.25%. That's a stimulus. Well, the Fed is increasing rates, hedges against inflation, allows us to not overheat. But those are short-term rates. When we want to look at on long-term rates in bonds, when the market is having trouble, the stock market having days where it's triple digits down 300, 400, 500 points, a lot of that money flows to the safety of bonds, right? Not just here in the U.S., but global money will move into the safe haven of bonds. I call it the cleanest shirt in the dirty laundry right now when you look at the global economy. Well, when bond prices move up, their yields move down. So you're seeing lower mortgage rates on longer-term bonds. Now, why should you care? I don't know. If you own a house, good opportunity to refinance. That's good news. If you rent a home, you might explore what I call a renting versus owning analysis. That's basically comparing what you're paying in rent when you're paying your landlord's mortgage, giving him tax advantages, not building any equity, to owning your own home, building equity, getting tax advantages. And look, you own it. There's a pride of home ownership. They call it the American dream, which is not really the reason that we named this show. That we do talk about real estate, but the American dream is about celebrating the fact that you live in the greatest city in the greatest country on the planet. And despite all the negativity out there, whether it's talking about politicians or the news, or in this case today, the market, there's a silver lining in everything. First and foremost, that we live in a great country. Second of all, that silver lining. So we're going to be diving pretty deeply into that throughout the remainder of the show. Get your phones out, text us, call us, go online, follow us on social media. That's the best advice I can give you. And don't forget to DVR, because we're here every morning at 10:30. So without further ado, let's go ahead and invite in our first guest. It is a financial advisor. You can hear him on my radio show on 1170 AM KCBQ, the Craig Sewing Show. This guy is super sharp, and he's become a great friend. Matt Rinke. This guy, awesome guy, trustworthy guy. Been on the radio show for a while now. You've seen him on the American Dream. It's awesome having him in studio. Matt Rinke, president of Illumination Wealth. Good to have you on the show.
Good to be here. Thanks for having me.
So you were on a radio show recently, and we talked about some of these things to our audience over there. I'm glad you're here today, because it's a confusing start to the year.
Oh, yes.
Right? So
yes.
What's the why behind it? We're off to a bad start.
Yeah, I think just the perception has changed. A lot of the same issues that are prevalent today were prevalent a year ago, 2 years ago. Investors are starting to take notice of them in a different way. And I even think seeing oil get cut in half, prices of oil going down significantly, on top of a company like Walmart shutting 250 stores, confidence is changing, and that can spill over into the financial markets, and you're seeing that with the stock market down pretty quick.
How much of this stuff is just a psychology versus fundamental reasons that the market is correcting? That's a tough question to answer, but do you think this is an overreaction?
As far as being an overreaction, I don't know quite yet, but I think so much of the marketplace is psychological.
Yep.
Like you said, a year ago, these same issues with China was slowing, our economy was slowing, there was uncertainty about interest rates. You're seeing the same thing today, but that psychology has changed. Howard Marks, phenomenal investor, he just penned a memo recently. He's like, in the real world, things go from pretty good to not so good. In the financial markets, they go from flawless to hopeless so quickly. Yeah. And it just seems like that's what's taking shape, just psychologically, big changes.
It's why you have to have an advisor, right? The emotion of it all, and we actually talked about this on the radio show recently. Every time I've ever been to Vegas, for whatever reason it might have been, I have never come out of there up money. Not once.
Not in your favor.
The odds are not that bad. It's like 50-50, or blackjack's like 52-48. I'm always down. Why? Because it's an emotional thing. And I think the same way, I know the same way with stocks. It's why guys like Buffett can say buy low, or no, his was be fearful when others are greedy when others are fearful.
Completely.
So right now you kind of have this state of influx. It's like, man, is this thing going to keep going down, or is this a good buying opportunity? I know it's tough to make those predictions, but what's the best advice you can give in a market like this where we're starting off this way?
I mean, there's a lot of different pieces of advice. I mean, one of them is people need to have perspective. They need to understand that this is completely normal and markets go in cycles. Even if things go down further, they always have recovered. You just need to be able to keep that perception and see through it. And if you don't have a plan, you got to have an investment plan. Like, what are you going to be doing? Are you going to be panicking and causing more portfolio damage? Are you really going to be sticking to things and knowing when you need to be buying, when you need to be selling? It's critical.
So my metaphor, analogy for Las Vegas in gambling is not good advice, right?
In the stock,
you should not gamble.
You don't need to be. Plan. You should not be gambling with your hard-earned money. You should be having a plan and making sure that you're avoiding the emotional decisions. You do not want to be doing that, because that is extremely costly.
So on a radio show recently, you were talking about the behavior gap.
Yeah.
Right. What does that even mean? Help our audience better understand.
So basically, there's the investment market returns. Let's say the S&P 500 on average earns 11% per year over the last 30 plus years. Well, what the investor gets, the typical investor, is like 3.7%. And there's a company called Dalbar. They study investor behavior, have been tracking 401k accounts for 30 years. And they've found those statistics, like the average investor underperforms the market by 7% per year on average. This is hundreds of thousands of dollars year in and year out that people are losing because they are panicking when the market goes down. They're waiting for the coast is clear to start buying, which may be a lot higher, and they're repeating this mistakes over and over and over again.
So purely the emotion.
Purely emotion.
Those decisions from the emotion within the state is what's causing those losses, and you're missing out on the gains because of the reactions. You know, it's pretty interesting. You use the word investor, right? And everybody knows what an investor is, but I want to take it more into context of not necessarily an investor, but you work hard, you have a family, and you're building your retirement or your kid's college fund. When I think of that, or I think of my dad and how hard he worked, I don't think of him as an investor. I feel like he's a guy who worked hard, put money away, and was a middle-class family. So when you say investor, can you translate that more to advice that you would give to someone just trying to build their retirement, build a good plan, just to live a good life?
Yeah, absolutely. I mean, we all are investors in some way, shape, or form. We're going to be investing our time into a career. We're going to be investing our money in our 401k plan at work. And so for everybody, I think it's important to be investing in a plan so you know what you need to be saving to take care of yourself, not just today, but also in the future. And so that's what a plan is foundational on. It's what do you want out of life? How are we going to invest our time? How are we going to invest our money? How are we going to save our money and spend it wisely too?
Helicopter view.
Yeah, take the big picture
Look
view.
at the whole thing. Again, radio show, one of the things you really drilled down on is focus on those things you can control. So market's going to go up, down. We don't know who's going to be president. That's a whole different conversation in itself when we get into politics. But things you can control, what can you do today?
Well, what you can do today is there's ways that you can enhance your return without taking on additional risk. That's reducing fees in your investment portfolio. That's looking at your interest rate on your mortgage. Is there a way to refinance and find an opportunity to save money there? There's so many factors, from expenses to taxes. Are there tax savings and tax shelters that you're not taking advantage of? Are you missing out on getting your 401k match from your employer? I see these things repeatedly throughout, people's lives, and it's low-hanging fruit that can be exploited.
Well, Matt Reinke, president of Illumination Wealth. Appreciate you coming in onto the American Dream here.
Thanks for having me.
I've heard you talk about tax planning. I heard you talk about financial planning. You just mentioned mortgage, making sure you're diversified. Even you mentioned real estate. This is a wide, broad, multiple categories of financial planning, and I want to remind our audience we can help you with all this stuff. This is really what my number one job is as a consumer advocate, is to go to bat for you. We bring guys like Matt in to just give some advice, obviously someone you can connect with as well right here in San Diego. But nonetheless, if you have questions, visit us online and let's see if we can help you. And it also, if you have hardships, we have people that reach out all the time that are facing bankruptcy. We had a guy yesterday that's home was underwater, credit score issues. We can help you there as well. So anything on that financial wheel, if you have questions, make sure you reach out. That's how we love to help you. That's what we do best. So Matt, thanks for coming on the show. Appreciate it, my friend. All right, coming up next, we're going to get into the mortgage report with Jonathan Giroux, radio show host on 1170 AM KCBQ. Mortgage rates are actually improving despite Janet Yellen raising them. So let's hear what Jonathan Giroux, a.k.a. JJ, has to say about interest rates.